Most traders spend all their time obsessing over entries, thinking the secret is finding the perfect PD array. But once you fully understand where price is likely delivering and why it's delivering there, finding entries becomes the least important part. To illustrate this, let's start by looking at the overnight analysis that I posted last night. Now, if you don't know, I post an overnight analysis or forecast of what I expect price to do and what I want to see in price action overnight. If you want to get those updates, go follow my X profile. It should be linked in my YouTube profile as well. So feel free to take a look at that. But anyways, in my analysis, I stated MES has shown weakness on the daily chart after closing below the daily BISI. So we had this daily buy-side imbalance, sell-side inefficiency in the form of this bullish fair value gap. We saw price close below that inefficiency, displace right through it after creating this all-time high. And then this week, we saw this daily candle show weakness, only able to reach the lower half, not even able to wick into the consequent encroachment of that inefficiency. Next candle opens, fails to reach the low of that buy-side imbalance, sell-side inefficiency, and then breaks lower. All right, so looking at how ES is showing weakness, I expected the same from NASDAQ to follow its footsteps. Looking at the daily chart on the micro NASDAQ, we can see Tuesday's candle here. It opened, rallied higher, wicking into the upper eighth and the new week opening gap of this week, the high of that new week opening gap, before breaking lower, returning back to its opening price, getting below that daily inefficiency. So seeing this move here, that also indicates weakness. And I was also looking at last Tuesday's, this candle here, discount wick, which is this wick, and the consequent encroachment of that wick, which I have it annotated on the next slide, but it's right around here. So keep that in mind as we go to the next slide. All right, so here on the 4-hour chart, I have that discount wick, consequent encroachment from that daily Tuesday candle. And as you can see on the 4-hour, price was able to get below that daily inefficiency, shaded in gray, and the body was trying to pierce through and dig into that daily discount wick. Looking at that, the anticipated draw that I had in mind was the previous daily low here and the sell side from last week, which was the previous week's low, which is inherently this wick here, Tuesday's low from last week. So these two pools of liquidity were my anticipated draws next. Going to the 15-minute chart, we can see how the bodies were using that daily discount wick and just consolidating on top of it. Now, had they pierced that previous day's low and last week's low and continued to expand lower, I likely wouldn't have been interested, but I wanted to see how, but there's an inefficiency below this candle's low here, and I wanted to see how price reacted to that level as it dug into that inefficiency. That would be the next draw for me, which is 28,553 and a half. Okay, going into the charts now. Here's the daily chart. We have Tuesday. This is that discount wick that I had annotated right here. Previous day's low, sell side liquidity, but had price broken lower and expanded past this low with extreme weakness, I wanted to see how it would react to this inefficiency here from this candle's low to this candle's closing price, because we have this volume imbalance in there. So if we take the buy side imbalance, sell side inefficiency, we have to take into account that volume imbalance, which is the difference from the closing price of this candle to the opening price of the next candle. All right, let's take a look at the 15-minute chart. So I posted the analysis around 2 a.m. Eastern time going into the London session, and we can see that price used that as support, essentially that daily wick consequent encroachment, which is the dash line in red, and price had a retracement higher, seeking this inefficiency here. And the new day opening gap, we can see how the bodies are using that prior to breaking lower. And you can see that price failed to reach the new week opening gap low. So still indicating weakness, but price did see this retracement going into the London session. And then around 5 a.m., we can see price broke lower and displaced through that daily wick consequent encroachment, taking out this pool of liquidity, this low here, and then consolidating below that daily wick's consequent encroachment level. And you can see how the bodies are closing well below that and are using this inefficiency here and staying in the lower half of that, just eyeballing it. So that previous day's low and last week's low, which is this lower red line here, they were both intact going into the AM session. At 9:15, we had this small wick past that previous day's low, but it hadn't done the damage that it needed to do yet. Going into the 1 minute here, we can see how price behaved overnight, consolidating between previous day's low and daily wick consequent encroachment, as well as the daily buy-side imbalance, sell-side inefficiencies low. We can see going into 9:30, price rallied higher, failed to reach the daily BISI consequent encroachment or the new day opening gap. What does that indicate? That shows weakness, broke lower using this inefficiency here as support. And I viewed this as manipulation because price hadn't done the damage it needed to do below these lows that was formed. Going into the 950 macro, we can see price seeked this inefficiency, which is also a balanced price range because we had one pass going higher and then one pass going lower, creating this balanced price range. Moreover, this is the first presentation fair value gap from the New York AM session. And if we just take a look at that, you can see how the bodies are showing premium sensitivity, meaning that they're showing weakness and aren't able to climb into the upper half. We have this candlestick trying to dig higher into the upper half. If we take a deeper look, this candle's discount wick from 938, we can see that it's just going into that and using that because wicks take precedence over inefficiencies when there is a prominent wick in the vicinity. So if I draw out the consequent encroachment of that wick, you can see it failed to even reach that there. See that? So another point of weakness there. The body breaks lower, and that's when the real move unfolds that I anticipated. From that point on, price folds lower, body's respecting that daily consequent encroachment. Now, if you felt unsafe and didn't feel comfortable going short here, that's totally okay. Wait for price to unfold. We can see the bodies are respecting that daily consequent encroachment of that wick. So if you didn't feel comfortable seeing that, wait for price to displace through. So here at 10 o'clock, price works its way below that consequent encroachment, showing weakness furthermore, and it closes here. Now, you could have looked to enter here with this bearish order block. What is it overlaying? That daily inefficiencies low and the daily wick consequent encroachment. So you could have used that wick, one tick below this candlestick's low, could have been your entry, using that as the bearish order block. Not only that, it's also a propulsion block because you have this bearish order block and this one is within the range of that bearish order block that formed earlier. If you don't look at order blocks, that's totally okay. You had this bullish fair value gap that would be used as inversion when price closed below the low of this fair value gap at 10 o'clock. What do you see here? The bodies can't even touch the low. They can't even get inside of that fair value gap. The wick falls short of the consequent encroachment there. You can see that, showing extreme weakness, which would have been another opportunity to go short. And again, what do you see here? It's overlaying that daily wick consequent encroachment. For higher probability entries and executions, you want to find PD arrays on the lower time frames that align with higher time frame key levels, meaning that they overlay the gradient levels of higher time frame PD arrays. All right. Let's say you didn't see this. You have the bearish breaker. Let me remove this so you can see. You have a high, a low, higher high. This candle here, this down close candle, what is that? That's your bearish breaker. What does it overlay? The daily buy side imbalance, sell side inefficiencies low, and that daily wicks midpoint. Again, price breaks lower at 10 o'clock. Look at where the bodies are closing with respect to this breaker. They're respecting the low of that breaker. The wicks can't even get to the consequent encroachment of it. Showing what? Furthermore, showing weakness. Price continues to fold lower, taking out previous day's low as anticipated, working its way to previous week's low as anticipated. Once you're able to analyze what price action is showing you accurately and anticipate the next draw on liquidity on the higher time frames, what price is likely to reach for, the entries become irrelevant, and you can always find a way to execute and enter. Focus on developing a better understanding of where price is likely to draw to and how it will draw there. Additionally, focus on the signatures and price action that I've been illustrating in the past few videos to validate and help support your hypothesis in what you expect for price to do. I posted that analysis at 2 a.m., hours before the New York AM session. That's what I wanted price to do. That's what I wanted to see in price action. And it unfolded the way I anticipated. The point is, entries are downstream from the narrative. A trader with a weak narrative will constantly search for better entries, while a trader with a strong narrative simply waits for time and price to align with what was already anticipated. I hope this was helpful. If it was, please leave a like and comment below. Thank you guys for watching, and I'll see you next time.